Jitendra Sriram, who's the Director and Head of Research at HSBC Securities, joins us on the show right now with his perspective on the market. This would be really the first question, given what we've seen over the last couple of weeks. But where do you think the market goes from here, Jitendra? I mean, do you expect it to be range-bound, or there's likely to be more downside risk before a strong upward move?
I think there's been a lot of, corrective elements in the market. In a sense, the results have been a little disappointing. I would probably think that, given the short-term outlook, you could see it drift down a little bit. But from a longer-term perspective, we remain quite constructive on the market. I think finally we are seeing some degree of, earnings starting to bottom out. The extent of cuts that comes through after every result, that's starting to ease up a little bit now. And obviously, valuations have turned a lot more favorable than what it was before.
What takes center stage, though, Jitendra? I mean, valuations may be fairly attractive, if at all not now, then maybe 5% lower. But if indeed the fears of what the worst that could happen in Europe do come true and fund flows dry out completely, do you think that there is a possibility that we may actually trickle down further 5 to 10% or maybe even more from these levels? Is that a possibility?
Yeah, absolutely. That is not our base case scenario, in a sense that, there is a disintegration in the periphery of Europe. But in case that happens, obviously the market correction in the near term, obviously there'll be a lot more corrective element then. And maybe it will not even stop then at 5% because, drying up, India is flow dependent, and in case flows dry up temporarily, it could lead to a bigger correction. But the fact is that, at some point of time over a course, once this panic settles in, the point is that you will see fundamentals come back to center stage. So near term, it's very difficult to call, given that we constantly are doing a flip-flop between risk on and risk off at this point of time. But our base case is clearly that, we will see some kind of, Europe holding fort.
What are your domestic clients doing, Jitendra, and what are you advising them per se at the current levels? I mean, is there some bit of buying happening in select pockets which may be distressed, or is everybody favoring only for buying growth, even if it's coming at a premium? Some part of what you say is also true, that there is market has become very narrow in the sense that people continue to be very focused towards consumption-oriented sectors, whether it is the staples or the defensives and so on. And, even though valuations may be turning a little expensive in pockets, we do see these stocks continue to get bid up. The second part that we are also seeing is this clear shift towards the exporters, given that, the rupee doing what it has been doing in the past couple of weeks. We are seeing a lot more interest come back towards names in pharmaceuticals, technology and so on, which to a degree also insulates you from the vagaries of the rupee, which has been prevalent in the near term. So I think those are the two major trends that we have seen so far. We have not seen a big comeback of interest into areas such as public sector banks or, something like industrials and so on. We have not seen those trends yet.
Right. What would be a contrarian call in this sort of a market right now, Jitendra?
Yeah, contrarian, I think clearly there will be one will be in terms of, maybe about a quarter or so later, sometime one could potentially start looking again at the state-owned banks. The reason being, I think a lot of negatives are already starting to get priced in terms of the deterioration of the balance sheet. And I suspect that over the course of next 1 or 2 quarters, you will start seeing that, pessimism is probably exceeding the actuals. And that would be a time to start nibbling back into the state-owned banks. And valuations are clearly getting lot more attractive. Second is, I think, from a industrials perspective as well, over the course of the next couple of quarters, one should start to look back at some of the asset owners which are there. Clearly, it is becoming increasingly difficult to acquire land. It's becoming increasingly difficult to set up mega projects. And people who are already established will see some better pricing powers with them. Then there will obviously be certain one-off stories of debt deleveraging or in terms of, restructuring of the balance sheet or sale of non-core assets. Those could be interesting candidates to look at as well.
Okay. My next question to you, Jitendra, but I'll need to get a chart check going on this one before I come to you, because Larsen & Toubro is ripping through the charts today, 6.5% higher now. Sandeep, just wondering, as a quick trade though on Larsen & Toubro, is there any existing, or you wouldn't dare to do that after the 6.5% up move seen already?
Well, one can take a 20 rupee stop loss at 1200 and take a 35-40 rupees target and play for a target of 1275 as a day trader, or possibly extend till tomorrow.
Okay, so some bullishness is Sandeep Wagle is indicating on LNT 1232, 6.5% higher, probably headed for higher levels. And that's my question, Jitendra. It's been a really difficult quarter for some of the cap good names, no different for LNT. The numbers weren't any great. But the commentary from the management of having a fairly bullish order inflow guidance for FY13, at least the body language seemed to suggest that. One, what do you do with this space? And two, if at all you were to invest into, maybe 6 months down the line, would you stick to the larger ones, or do you believe the mid-sized ones could also perk up if indeed investments start happening in the second half of the year?
I think one needs to approach it in two different ways. If you clearly see a broader base, broader brush recovery in the India story, maybe then even the mid-caps will start doing well, because clearly valuations are reflecting a lot of pessimism. But if it is going to be very much more driven by a few large mega deals and market remains very narrow, I would still go with the large cap name, because they would still have the ability to probably, win business of the select few ones that come up in India, and as well be capable of taking on something that comes up in the overseas markets, areas such as the Middle East or certain sporadic activity pockets in other markets. So if it remains a narrow market, I would stick to the large caps. But if it becomes a much more broader brush kind of a recovery in industrial investment, then probably even the mid caps will then follow up.
I know you must be asked this question many times, but what is the kind of growth value trade-off that you're seeing in defense, especially FMCG stocks, which are trading at expensive valuations right now?
I think it is a question of there is no alternative kind of belief there, in a sense that even if you divest, where do you head for from here? So to some degree, yes, that factor is playing out here. But what we have also seen is that, there is this element of movement into some of the kind of consumer durables or even, some of the names that are probably not in the front line here. So people are going a little deeper to get their value proposition right in the consumer space as well. So staples, some of the durable names, those are all getting bid up as a result.
Jitendra, come to you on some of the niche consumption stories in the broader markets, the likes of Jubilant FoodWorks, the TTK Prestige. Would they be off the mark given that they pretty much entered into an overbought zone?
Yeah, I don't, we don't have any formal coverage on these names, so clearly it's very difficult on me to comment on these specifically. But having said that, as I mentioned, because of the lack of alternatives in the consumer space, we have seen that companies that are doing well are definitely getting bid up a lot more. So maybe, some of these do tend to be expensive in the near term, or a lot of the positives are already getting priced in fully in the near term. Of course, I wouldn't debate the fact that, the long-term multi-year structural story or, out-of-home eating or whatever the trigger might be in each of these individual names could very well be quite a potent driver in the long term.
Could there be a contrarian position on energy as well right now, despite the fact that there's not such a clear sign on earnings, perhaps a Reliance Industries or even the oil marketing companies in the back of, policy development there?
Yeah, I think Reliance at least is now coming to kind of a zone which is starting to look interesting. Whether, the bottoming out phase happens right now or in a couple of months from now, that remains to be seen. But the fact is, I think, the stock has been in a corrective mode, which from that perspective, it is starting to look interesting. Of course, at this point of time, we do have a neutral on the stock, but, it's starting to at least at some point of time, I think it will start to look interesting if this kind of underperformance to the market continues. Coming to the other things that you mentioned in terms of oil marketing, clearly, in case, the big thing that we need to differentiate here is between deregulation and a price hike. I think people have been using the term far too loosely, that one price hike does not mean a deregulation. So in case we do actually see that certain areas, at least like petrol and all, which can be deregulated, actually are deregulated in that regard, I think you could see the sector getting re-rated a bit. But in case it is going to be one price hike and then again a kind of a quasi-control on the sector, then it's not going to take us anywhere then. You might just have a trading pop and then again it starts to fizzle out.
Jitendra, come to you on certain specific stocks, especially the paint sector in the market. I mean, there are very few stocks from the segment, but have been touching record highs related to, in a way, to the consumption theme. You think Berger Paints, Asian Paints hold value?
We don't cover either of them, so I don't know about the specific names as such and what valuation they trade at. But broadly, yeah, we have been having a boom in property prices for a fair amount of time, and I think it obviously percolates down to demand for the paint sector over a period of time. Typically, given that repainting requirements come up with about a 4 to 5 year lag with the original painting which the builders do and hand over to customers. So from that aspect, that is clearly a driver for this entire sector, given the kind of housing stock that's created each year. Second is also, I think, from a near-term perspective, a lot of the raw material for this industry is dictated by crude movements, and I think the kind of easing that you have seen off late in crude is also bolstering sentiment for this sector.